Are you watching from the sidelines as artificial intelligence transforms the world? This isn't science fiction, it's happening now, and it's creating opportunities for generational wealth. The real question, will you be part of this change or left behind? The market is buzzing with AI potential, but the biggest gains often come from smaller, innovative companies flying under the radar. AI is rewiring the global economy, from defense to drug discovery, giving early investors a shot at life-changing returns. The smart money is already moving in. Are you ready to get in the game? Stick with me, I'm about to reveal 2 AI companies you need to know. Let's dive in. We're skipping the obvious names and looking at 2 underappreciated AI players. The first is a heavyweight in enterprise AI, building systems for the world's largest organizations, including the US military. The second is a specialist in national security, using AI to sift through massive data and enhance security at major airports. Both have made bold moves, one with a strategic acquisition in facial recognition, the other with a growing backlog of contracts. Their stocks have been beaten down, but the long-term stories are just getting started. These companies have real products, real customers, and a vision to dominate their niches. Ready to hear the names? Let's go. Don't just skim for ticker symbols. Winning in this market means understanding the details. I'll break down the bull and bear cases, the numbers, and the risks for each company. We'll dissect their business models, financials, and what sets their technology apart. Then, we'll compare them head-to-head so you can decide which fits your risk profile. This is the kind of analysis Wall Street charges a fortune for, delivered straight to you. Hit the like button, let's get 1,000 likes on this one. Share the video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. This video is sponsored by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. First up, 𝗗𝗟𝗏, ticker symbol AI. While the name might sound like a generic buzzword, 𝗗𝗟𝗏 is anything but ordinary. This company is a pure-play enterprise AI software provider, laser-focused on bringing artificial intelligence to the world's largest organizations. Unlike consumer-facing AI tools, 𝗗𝗟𝗏 operates behind the scenes, powering the digital transformation of industries that most people rarely think about: energy, manufacturing, financial services, and even government agencies. Their core mission? To help massive corporations and government agencies deploy AI at scale for their most critical high-stakes operations. Think fraud detection for global banks, predictive maintenance for sprawling supply chains, and real-time optimization for energy grids. 𝗗𝗟𝗏's platform is designed to handle enormous data sets, integrate with legacy systems, and deliver actionable insights that can save millions or even billions of dollars. Their software isn't just about automation, it's about enabling smarter, faster decisions at every level of an organization. One of the most impressive endorsements of 𝗗𝗟𝗏's technology comes from the US military. Their platform is a key component of the Air Force's predictive analytics program, which is widely considered to be one of the largest and most ambitious AI deployments in the entire Department of Defense. This isn't just a pilot project, it's a mission-critical system that helps the military anticipate equipment failures, optimize logistics, and enhance national security. When the stakes are this high, only the most robust and reliable AI solutions make the cut. Despite these impressive credentials, 𝗗𝗟𝗏's stock has experienced a wild ride. After soaring to dizzying heights during the initial AI hype cycle, the share price has since tumbled, leaving many investors wary. But here's the twist. While the stock has dropped from its highs, the underlying business keeps growing. 𝗗𝗟𝗏 continues to sign new clients, expand its product offerings, and deepen its relationships with existing customers. The market may be skeptical, but the company's fundamentals are quietly improving. Of course, there are real concerns. Investors worry about profitability, as 𝗗𝗟𝗏 is still investing heavily in research, development, and sales. There's also the issue of customer concentration. Relying on a handful of big clients can be risky if any one of them decides to leave. But 𝗗𝗟𝗏 is actively addressing these challenges. They're diversifying their customer base, expanding into new industries, and building a more resilient business model that's designed for long-term dominance rather than short-term gains. Strategic partnerships are a big part of 𝗗𝗟𝗏's growth story. By teaming up with cloud giants like Microsoft Azure and Google Cloud, 𝗗𝗟𝗏 is able to reach a global audience and embed its technology deep into the digital infrastructure of its clients. These alliances not only expand 𝗗𝗟𝗏's reach, but also provide a level of credibility and technical integration that's hard for competitors to match. As more enterprises migrate to the cloud, 𝗗𝗟𝗏 is positioned to become an essential part of their digital transformation journey. Another key advantage? Once a client builds their operations on 𝗗𝗓.ai's platform, switching to a competitor is no small feat. The software becomes deeply embedded in their workflows, data pipelines, and decision-making processes. This creates what's known as stickiness, a powerful force that leads to long-term, recurring revenue. For 𝗗𝗓.ai, every new client is not just a sale, but the beginning of a multi-year partnership. In a market obsessed with flashy consumer AI, 𝗗𝗓.ai is a mispriced growth story hiding in plain sight. Their technology powers the backbone of modern enterprise, and as digital transformation accelerates, their opportunity only grows. For investors willing to look beyond the headlines, 𝗗𝗓.ai could be the enterprise AI powerhouse that everyone else is overlooking. Let's talk numbers, because in the world of tech investing, numbers tell the real story. 𝗗𝗓.ai has been on a remarkable run, posting 4 consecutive quarters of revenue growth above 20%. If you set aside its largest legacy contract, that growth rate jumps to an impressive 37%. This isn't just a blip, it's a sustained trend that signals strong demand for 𝗗𝗓.ai's products and services. The company is clearly gaining traction in a competitive market, and that kind of momentum is hard to ignore. With a market cap of $3.22 billion and 2024 revenue reaching $389.06 million, the company is still navigating its journey toward profitability, having reported a net loss of $288.70 million for the year. Despite this, investor sentiment is showing signs of a rebound. Analysts have projected a near-term upside potential of 27.5%, driven by renewed optimism surrounding the company's strategic initiatives and its foothold in sectors like defense and energy. At the heart of 𝗗𝗓.ai's growth strategy is a shift toward a partner-led sales model. Collaborations with industry giants such as Microsoft are expected to accelerate scalable expansion, especially as AI adoption grows across industries. This approach is being seen as crucial for increasing its competitive edge in an increasingly crowded marketplace. Another major catalyst has been its $450 million contract with the U.S. Air Force, a key win that strengthens 𝗗𝗓.ai's presence in the federal AI space and underscores the growing demand for advanced AI capabilities in government operations. Recent earnings have also contributed to a brighter outlook. The company beat analyst expectations, with revenue aligning closely with forecasts, boosting investor confidence and setting the stage for a possible turnaround. Analyst consensus remains cautiously optimistic. With a 25.5% upside price target, there's growing belief that 𝗗𝗓.ai could regain momentum if it maintains focus on execution and market penetration. Still, it's a story that balances promise with the reality of navigating losses and market volatility. The coming quarters will be pivotal in determining how effectively the company can translate its strategic partnerships and contracts into sustained growth. Of course, not everyone is convinced. Critics are quick to point out that 𝗗𝗓.ai isn't profitable yet, but here's the thing. That's actually pretty typical for high-growth tech companies, especially those investing heavily in research, development, and customer acquisition. In fact, many of today's tech giants spent years in the red before turning a profit. 𝗗𝗓.ai is pouring resources into building a foundation for long-term success, prioritizing innovation and market share over short-term earnings. For investors with patience, this approach can pay off handsomely down the road. When you look at valuation, 𝗗𝗓.ai stands out. The stock currently trades at a price-to-sales ratio of about 8. To put that in perspective, competitors like Palantir are trading at price-to-sales ratios north of 100. That means investors are paying a much lower premium for 𝗗𝗓.ai's growth compared to some of its peers. For value-conscious investors, this could represent a rare opportunity to get in early on a company with significant upside potential without paying sky-high multiples. But let's not ignore the risks. One of the biggest concerns is customer concentration. 𝗗𝗓.ai relies heavily on a handful of large clients for a significant portion of its revenue. If any of those relationships were to falter, it could have a major impact on the company's financials. There's also the challenge of translating rapid revenue growth into sustainable profits over time. Investors will want to see a clear path to profitability as the company matures. On the positive side, 𝗗𝗓.ai is actively working to diversify its client base and forge new partnerships. The company has been expanding into new industries and regions, steadily adding more customers to its roster. These efforts are starting to pay off, as evidenced by the growing number of enterprise clients and strategic alliances. With a reasonable valuation and a business model built for scale, the upside for investors is compelling. The company's strategy is clearly gaining traction, but the broader market hasn't fully recognized its potential yet. Sometimes, the stock price lags behind the underlying business performance, and that seems to be the case here. For those willing to look beyond the headlines, there's a real opportunity to invest in a company that's still flying under the radar. Ultimately, investing in 𝗗𝗟 is a calculated bet on the future of artificial intelligence. The company is positioning itself as a leader in a rapidly evolving industry, and its financials suggest it has the firepower to compete with the best. If you believe in the transformative power of AI, 𝗗𝗟 could be a smart addition to your portfolio. The opportunity is real, if you can stomach some volatility. As with any high-growth tech stock, there will be ups and downs along the way, but for those with vision and patience, the potential rewards could be well worth the ride. Next up, let's talk about BigBear.ai, ticker symbol BBAI, a company that's quietly become a powerhouse in the world of artificial intelligence, especially when it comes to national security, defense, and intelligence operations. While some AI companies chase headlines, BigBear.ai has been building a reputation as a trusted partner for some of the most sensitive and high-stakes missions out there. Their expertise isn't just theoretical, it's proven in the field, where the stakes are often measured in lives and national security. Their advanced technology is designed to help government agencies and private organizations sift through massive complex data sets. Think everything from real-time surveillance feeds to intelligence reports, to extract critical insights that can make all the difference. For example, at major airports like Dallas-Fort Worth, BigBear.ai's solutions are already in action, helping security teams identify threats, streamline passenger flow, and respond to incidents faster than ever before. Their systems can process and analyze information at a scale and speed that would be impossible for humans alone, making them an essential part of modern security infrastructure. Recently, BigBear.ai made a strategic move by acquiring 𝗗𝗟𝗏, a company recognized as a leader in vision-based AI and biometric technologies. This acquisition isn't just about adding new tools to their arsenal, it's about positioning BigBear.ai for significant commercial growth, especially in the booming fields of security and identity verification. With 𝗗𝗟𝗏's expertise, BigBear.ai can now offer cutting-edge facial recognition, advanced identity management, and seamless integration with existing security systems, opening doors to new markets and customers beyond their traditional government base. Of course, the stock itself has seen its share of ups and downs, reflecting both the excitement and uncertainty that come with rapid innovation. But here's what stands out. BigBear.ai boasts a $385 million backlog, representing deep, multi-year commitments from clients who rely on their technology for mission-critical operations. This backlog isn't just a number, it's a testament to the trust and reliance that major organizations place in BigBear.ai's solutions, and it provides a solid foundation for future growth. BigBear.ai, this emerging name in the AI landscape is gaining traction with a market cap of $1.31 billion and revenue of $158.24 million in 2024. Like 𝗗𝗟.ai, it remains unprofitable, posting a net loss of $257.09 million, but its value proposition lies in its niche, AI-powered decision intelligence, with a strong focus on government and defense applications. What's capturing investor interest is BigBear's impressive $384.9 million backlog, a signal that demand for its AI solutions, particularly in security and predictive analytics, is on the rise. This pipeline is expected to fuel revenue growth in the second half of 2025 and possibly nudge the company toward break-even. One of the recent highlights includes successful deployments of biometric technology at major US and Canadian airports, expanding its operational footprint and validating its technology in real-world scenarios. Analysts are now starting to stack BigBear up against other players in the AI sector, pointing to its unique edge in decision intelligence as a differentiator. However, despite the buzz, the company isn't without hurdles. Legal investigations into potential fiduciary breaches by its board are ongoing and may dampen investor confidence if not resolved swiftly. Additionally, its continued financial losses raise concerns about long-term sustainability. Still, the combination of growing market demand, strategic deployments, and a solid backlog places BigBear.ai in a promising position within the broader AI narrative. What's especially interesting is how BigBear.ai is leveraging its strong reputation in the defense sector to expand into commercial markets. By combining their deep analytics expertise with state-of-the-art vision AI, they're creating a unique blend of capabilities that few competitors can match. This approach allows them to serve a broader range of clients, from government agencies to private enterprises looking to enhance their security and operational efficiency. This strategy of diversification is already starting to pay off. By tapping into new revenue streams and transforming their business model, BigBear.ai is positioning itself to become a much bigger player in the AI landscape. The company's ability to adapt and innovate could be the key to unlocking significant long-term value for both clients and investors. It's a bold move, no doubt, one that requires vision, confidence, and a willingness to take calculated risks. But with the right execution, BigBear.ai could emerge as a leader not just in defense, but across the entire AI-driven security and analytics sector. For investors, this represents a high-potential opportunity that's worth watching closely. Of course, with big upside comes big risk. The AI sector is fast-moving and highly competitive, and success is never guaranteed. But for those willing to ride the ups and downs, BigBear.ai offers a compelling story of innovation, resilience, and the pursuit of something truly transformative. Let's be real. BigBear.ai is a high-risk, high-reward play. Revenue growth has been slow and the company is burning cash while carrying significant debt. The bull case: if they integrate Pangiam and convert their backlog into revenue, the stock could be a bargain. The bear case: financial weakness and dependence on government contracts make them vulnerable. The market is pricing in risk, but a successful turnaround could send shares soaring. This is a speculative bet, not a safe haven. If management executes, the rewards could be huge. If not, the downside is real, so size your position accordingly. Time for the head-to-head. 𝗗𝗟𝗏.ai boasts strong, consistent growth and a healthier balance sheet. BigBear.ai lags in growth and carries more financial risk, but offers higher potential upside if its turnaround succeeds. On valuation, both are reasonable, but 𝗗𝗟𝗏.ai's premium is justified by its performance. 𝗗𝗟𝗏.ai is the safer, growth at a reasonable price pick for most investors. BigBear.ai is the high-stakes turnaround. More risk, more possible reward. Your choice depends on your risk tolerance and investment style. One is a calculated risk, the other is a high-stakes wager. Which fits your portfolio? There you have it. Two beaten-down AI stocks with very different risk profiles. 𝗗𝗟𝗏.ai offers proven growth. BigBear.ai is a bold turnaround bet. As the industry continues to evolve, both 𝗗𝗟𝗏.ai and BigBear.ai remain high-risk, high-reward opportunities for investors looking to gain exposure to cutting-edge AI innovations in real-world applications. The information is in your hands. Now it's your move. Do your research, weigh the risks, and decide if either deserves a spot in your portfolio. Share your thoughts in the comments. Let's build a community of smart investors. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Don't forget to like, share your thoughts in the comments, and subscribe to the YouTube channel so you don't miss out on the next important financial investing update. Thanks for watching, and I'll see you in the next one.